Now let's focus on one of the announcements in the Chancellor's statement. The stamp duty threshold is being doubled from £125,000 to £250,000, and for first-time buyers that will rise to £425,000. It's boosted the shares of home builders, and it comes as rising interest rates are making mortgages more expensive for many, which has sparked fears of a housing market slowdown.
We can discuss all of this with Giles Mackay. He founded the property analytics firm HomeTrack, which he sold to Zoopla in 2017. Now he's leading the startup UPSTIX, which is a digital platform for property sales. Giles, great to have you with us. What effect do you see these stamp duty changes having on the property market?
If we look at stamp duty initiatives going back in history, there have been 5 or 6 of them since stamp duty was introduced in 2003. It does always have some kind of effect on the marketplace, and quite often quite a significant effect. But the question is, how long does that effect last, and what is does it have longevity? And the interesting one here, which really relates to the current initiative, is that when just purely first-time buyer stamp duty rates were changed in 2018, the actual effect was negative, but everything else has worked out pretty well. 2009 was a positive marketplace, 47%. 2015 was positive 35%, and 2014 was a positive 35%. So it has worked over time. A caveat there: it's never been tried before when interest rates are rising. So ordinarily, you put stamp duty initiatives in place when the marketplace is in a little bit of a recession. Obviously, we have something of a boom, and now we have interest rates rising, and people considering there may be something of a flattening out or even a fall in the housing marketplace. And obviously, what we're aiming for here is to try and make that not happen.
Now, when you talk about through the stamp duty cuts through history, and you're saying it was a positive, you're talking about house prices rising, right? So that's a positive in some ways if that's the outcome you're going for. Just going back to the latest stamp duty cut, the one during COVID, what's your view as to how effective that was or how important that was in rising house prices? Because we've obviously had lots of other factors driving the housing market, didn't we, during the pandemic?
So house prices were already rising at that point, and which they were globally. You go right across the globe, house prices rose as people effectively had a view of where they want to live, which was more space. So house prices rose across the globe. The marketplaces which rose the quickest, New Zealand, is falling the fastest. Interestingly, GB was number 2, and we haven't yet had a fall. But the other marketplaces, Australia, for instance, Stockholm, have all fallen quite a bit. So we've been defying gravity a little bit right now, but we of course have had very low interest rates for quite a long time, and now they're on the rise, and suddenly. So I think in order to answer your question, it did have a big effect. It probably inflated an already inflating marketplace. Did it create a bubble which is about to burst, or is that marketplace sustainable? And I think what we're seeing right now is that actually, my view is that prices won't change dramatically, and I think this incentive that came in today would probably mean that they flatten off for a while. But we could also see some falls.
I'm conscious that obviously the cost of mortgages is going up dramatically, and in fact the reaction in the markets to the budget announcement would seem to suggest the Bank of England is going to have to hike rates even faster than we had been even higher than we had been expecting before today. How do this dynamic balance out in the markets? If mortgages are going to get a lot more expensive, will the stamp duty cut actually balance that out at all?
So they are. Well, they've already got a lot more expensive. I mean, you've gone from maybe 1% in some cases to 5 to 6%. So we're really talking about a very significant increase than where they were before.
But there are talks of the current rate potentially doubling from here again. So the proportionate increase to how much mortgages are going to cost is going to be even bigger than what's happened so far.
Yeah, I don't see that happening. If you look at the medium-term yield curve for inflation-rated bonds, then this lasts for a year and a half, and then they're back down to the long-run average. So your view as to how long inflation will last is a pretty good key to how long we think interest rates at this level will stay up. But we can be looking to have these interest rates up here, I would think, for at least a year and a half from now. And but if you look back at 1992, which was the last time we really had an interest rate-driven event in the housing marketplace, of course, at that point in time, interest rates were raised above the level of inflation. Of course, the level of inflation we've got, so if inflation then was about 10 or 12, 14%, interest rates were getting to nearly 20%. This time, inflation is at 10% and interest rates are at 5%, so they're half the rate. So I think you need to take that into account in the context of looking at that. However, the caveat there is 4 to 5 times more expensive than people have been paying before, against the background of already shrinking wallets because everyone's paying cost of living increases, especially energy.
Just bring us up to date with how the market's been looking these last few months. You mentioned some of the markets around the world which are nosediving, quite frankly, New Zealand, Canada among those. But you say we haven't really seen prices haven't really dropped off, have they, in the last few months? What about transaction levels? How have things been in the last few months?
So interestingly, if you look back at transactions over even the last 5 years, despite the noise around a lot of extra transactions during COVID, that was only effectively picking up where the transactions fallen entirely in 2020. The long-run average for transactions in the UK, according to HMRC, is about 1 million transactions a year, and that hasn't really varied a lot. And in fact, because not much property is put into the marketplace, actually most of those properties are sold. So long-run average remains relatively steady, and I think looking at the RICS index, which is probably the most up-to-date index you can get to, which is surveyor stocks, for August, those stocks still look like they remain relatively buoyant.
Is this going to, do you think, boost home building? We heard measures announced by Kwasi Kwarteng as well, designed to ease planning regulations. Is that going to help spur demand and spur more homes to be built?
So, well, of course, government tend to think that the supply side really works in the context of the housing market. The reality is you've got 1.5, 2 million planning consents out there sitting in the market already. What the house builders are looking for is a ready marketplace for the properties when they're sold. They would tell you that they have a full order book going on till the middle of next year. The full order book relies on people who've made registrations. The question is, do a lot of those people have registrations falling by the wayside as they go back to their mortgage lender and try and confirm their mortgage offers? If those stay steady, the house builders will continue to will have sold into the amount of sales they've got right now. If the market remains with some demand in it, the house builders will build. If the demand disappears, the house builders will stop, because the way it works at the moment is build 5, sell 5, not the way it was before 2008, where you used to build a whole estate full of houses and sell them all. So very different housing market than we had back in 2008.
How much do you think this stamp duty cut will really make a difference, given the big rise in interest rates, which is coming our way and has already started coming? Yeah,
so I think it will stabilise the market. I think we could have, if you, again, looking at the RICS data, you look at the latest data came out in August, and the overall sentiment from surveyors is down to about a zero, down to a flat housing marketplace over the next 12 months. And they seem to think there'll be about 3 to 4% annual growth if you look over the 5-year term. I think that the stamp duty change will just cause to stabilise the marketplace, which could stop it going down below zero.
Okay, Giles Mackay from UPSTIX, thank you very much for joining us to discuss the changes to stamp duty announced by the Chancellor today and what they're going to mean for the property market.